let's talk about DATs since we have, I guess maybe our first DAT representative on the show. I mean, Brian, Upexi was very early into the Solana Treasury game. Talk about what the last couple of weeks have been like for you.
I'd say not much has really changed. So for us, we're really focused on what we can control. For any DAT, that's really two things. One is you want to be as visible as possible. So you want to maximize people actually knowing about you. And so if they think about, hey, I want to invest in Solana, maybe a DAT is the best way to do it. They think about Upexi. And so we announced this morning that we're at 3 different traditional finance conferences later this month. I'll be disappointed if our pace doesn't pick up over the rest of the year. And so we're really hyper-focused on increasing our visibility. We have a bunch of other initiatives afoot there. And then the second component is issuing equity, which would you issue equity above book? It is by definition accretive for shareholders. MSTR selling at 2 times. They've come in a little bit, but it's tantamount to selling $1 for 2, or buying Bitcoin half off. And this is how they created literally 26 billion worth of free Bitcoin for shareholders over the last 6 quarters. So we're very focused on figuring out what we can do there. We have an equity line that we're hopeful will go effective very soon. And then we're always out in the market, and this is not MNPI. It's the business model of a DAT to raise capital in this accretive fashion. So we're looking at all options in order to do so.
Okay. And Chris, let's review.
If you step back, this is the summer of DATs. 2021 was DeFi summer. This is where DATs came on the scene and established themselves as a core innovation. And a lot of that unlock was frankly regulatory. Saylor proved it. And now we've got this regulatory unlock. Now, I'll agree with Ram. There's a ton of froth. However, I believe, probably like Brian here, that DATs are going to emerge as a fundamental part of market structure within crypto ecosystems, public facing. And then you've got the foundation labs, maybe they consolidate. But this has been a major innovation. And the reason why not all of them have been successful is because it's really, really hard to pull it off. And we've been very, very active in the space. To make a DAT work, you need about 5 elements. Market timing has to be right. The market has to be ready for you. The market was closed for a long time, really important. Timing is hugely important. You need good fundamentals on your token. And I think as we depart Bitcoin, we get into yielding assets. And that gets really exciting when you stake and you restake and you can generate fundamental value that way to generate a natural MNAV. Foundation alignment really, really helps. You need to have a really good advisors, bankers who know what they're doing, top notch. You need a strong management team. You need good asset managers who know how to manage those underlying assets and drive that yield. And then perhaps most of all, you need a KOL. You need someone who can tell the story and who can translate. These DATs are beautiful convergence tech innovations. They bring it all together. I think they're here to stay. Yes, there's going to be a shakeout, but the winners are going to be really, really a special thing to watch. And we're very excited. And by the way, I don't think we're at the beginning of this. I don't think we're at the end of this. I think we're at the very beginning. I think there's some amazing projects that are still coming out. And yeah, we remain really excited.
Yeah. Brian, one of the interesting trends that came out when DATs first came to prominence, I guess, post-Saylor, was the fact that the first companies to follow were focused on Solana, not ETH. And it was you guys, it was Sol Strategies, and it was Defy Development Corp, I believe. I always get that last name. I was confused that last name. But now, I mean, ETH recently hit an all-time high. ETH treasury companies are raising billions. And Solana is all of a sudden, in certain ways, maybe the little brother to Ethereum again. What is it like for you right now? Because I'm sure when you're out fundraising, investors are asking about the differences between Solana and Ethereum. They both can generate passive yield. What are some of the hard questions that you're getting in some of these meetings, and what are your responses to them?
Yeah, that is a great question. I would say that candidly, the knowledge in TradFi is quite low. So the most common question I get is like, what's the difference between Bitcoin and Solana? Not even like, what's the difference between Ethereum and Solana? So,
I thought we were past that.
Yeah, I mean, there are some folks that have some sort of a background in crypto or digital assets, and will start to ask hard questions, but nobody's asking me about like, when is Solana going to implement multiple concurrent leaders, like that type of thing. I still think that there are some folks that don't truly buy into the value creation from a DAT. Like for me, it's really about having access to these value accrual mechanisms that, by the way, all compound. So the big one is issuing equity above book value, which you can do either via like an ATM or an equity line, or even if you go to any sort of like convertible note issuance. Most like options pricing models will have like a really high delta there and will suggest like there's a 90% plus of these things to convert into equity because the duration of these notes are so long and the volatility of the underlying is so high. So that is another way for DATs to actually sell equity at an even higher MNAV than where they're currently priced. And so like that to me is the big one. This is where like MicroStrategy has created so much value for shareholders. It's more than tripled the return of Bitcoin and it has barely any leverage. But the second thing is when you get into pre-mined tokens or you get into tokens that are built on a proof of stake consensus mechanism, you can do things like staking where like Upexi is staking to earn an 8% plus yield, turning our treasury into this productive asset. And we're also buying locked tokens at this 15% discount. If you put that discount into any sort of yield equivalent, we're roughly doubling the staking yield on anything that we buy in locked form. And we have this buy and hodl strategy. We don't intend to sell any SOL, so there's no reason for us not to do that. And so these additional value accrual mechanisms are things you can't get by buying a token natively or in other instruments like an ETF. And so I think a lot of this is investor education and just walking them through how powerful this model can actually be when you're underpinned by the right token.
Can you elaborate on the statement you had at the outset around banks or DATs? Like banks are FDIC insured, they can rehypothecate, they have a lender of last resort. What were you getting at there?
Yeah, this is a massive simplification, but banks earn spread income. They raise funds from depositors, they lend to borrowers, and they make the difference between the yield on loans and their cost of deposits. And then also a massive simplification, but investors will basically present value all of that future spread income and add it to book value. Banks generally trade above book value. They don't really issue equity because it's hard to come by loan growth. But there are historically some banks like M&T that have just issued equity again and again because they traded at this premium multiple and they used it for this roll-up strategy. And they just basically...
It's more of a BDC, I would say. It's a BDC, like a private credit fund that's publicly traded. Business company. They make loans, they earn spread, they've got some back leverage. They're trying to capture that spread. And they're
We're kind of the same way. So we raise funds from the capital markets. We invest into Solana. We earn the difference between the return on SOL and our cost of capital. When the market thinks that the return on SOL will outpace our cost of capital, that spread will be positive, not just this year, but in future years. They will present value that, add it to the NAV, and that will work out to be something that's above 1 that we can then monetize for shareholders.
Got it.
It's hard to underscore the importance of this education, right? Now we have these DATs running around all the traditional long-only investors and explaining, what Solana means, how it's a yielding asset. Like that education is just so good for the asset class. And I think that's probably the biggest benefit to the ecosystem of what we're seeing here.
Yeah.
Is it education or marketing promotion?
It's both.
When we first started, there were a lot of questions as to whether this was just a money grab and whether DATs were this existential threat to the token ecosystems they're underpinned by because you could be a forced seller at exactly the wrong time. And then I think folks have seen like Ethereum success, and Tom Lee is on CNBC every other day. And in my opinion, like this is what lifted ETH from 2,700 to 4,700 is the main reason.
Yeah.
So I think like now there's this big focus by a lot of other token ecosystems to really embrace and push DATs forward just as another key visibility mechanism to get them out there, especially to traditional investors.
There's so many DATs, I wonder if you were to poll someone on Twitter and say, can you name 8 tickers for DATs? I don't think anyone could. I know Chris could. I know Brian could. It's like, I think about the dad who has like 8 kids. I struggle with 3 kids, my kids' names. I call one by the other name. People know MSTR for sure. It took years to build that brand and awareness. It literally comes down to these things. Like, how many elements then can the human mind recall? And you're competing for those slots in the context of other tickers. It is the attention game. It's not just the product game, which is Brian and Chris, where you were focused on the value creation machine and the financing machine and the staking yield packaging machine, et cetera. It's like there are not enough slots in the human mind for all these players to succeed and thrive.
What do we make though? I mean, the attention game. I mean, Tom Lee and Bitmine, their MNAV is I think 1.1 now, and it's been dropping. What do you guys make of that?
So I haven't been super close on other ecosystems, but my impression is that Bitcoin has kind of become saturated. I think you're seeing some like Imperi and Sequans that are trading at like 0.7, 0.8 of NAV. I don't think that Ethereum is saturated, but I think it is a bit of a race. And so I think you're seeing some of the players in there sell equity all the way down to 1x, whereas you had someone like MicroStrategy that when they were the only game in town, they would only really sell via their ATM when they were at 1.6, 1.7 or higher. So I think all that selling out there, and I see why they're doing it, they want to be the biggest because whoever's the biggest gets the most trading volumes, and then you can issue the most equity via the ATM because that's what you're kind of limited by. So like that, in my opinion, is what is happening out there in the other token ecosystems. I do think that Solana has the highest staking yield. You can buy locked tokens at this discount for built-in gains for shareholders. And so I do think like there's some argument for a Solana DAT to trade at this higher MNAV versus some others. And so far that is proving to be true. But again, like, I mean, it's out there in the public news, there are other Solana DATs coming. So we'll see if that does anything to the MNAVs either way.
Yeah, I think you're at 1.7 right now. I was just checking your website.
Chris, in your view, what's the better move? Like, is it better to own spot commodity or own the DAT? If I look at Ethereum, like Ethereum's got a forced bid from these DATs. So it's an accumulation bid. And if you're a DAT, you're issuing shares. That's called dilution. That's sell pressure. It isn't the simple idea just buy what people are forced to buy. Keep it simple.
Okay, so it's still super early as we get into a lot of the DATs. And I'll give you an example. Last week, we put together a letter to the SEC and FASB because LSTs were considered, liquid staking tokens are considered intangible assets. And so like we still need to have a lot of things to come together. A lot of these DATs are only getting the machine running right now. I saw that one of our portfolio companies, Etherfi, benefited from, Ethzilla put some ETH to work there. So it's very early. But when you step back, let's look at like ETH as an example because there's a little more complexity around the ETF. You can invest in the ETF. You can invest in spot. For a lot of investors, they can't touch spots. So that's off the table. That brings them to the ETF. But the ETF, they can't generate yield because of there's a lot of constraints around daily liquidity with ETFs. You have a 13-day unbonding window. You can't just stake. Eventually, they'll figure it out and you'll have a total return product. But it's an inferior product. No offense to the ETF issuers, but it is because you don't get that yield. And that's core to the investment if you're a long-term investor. If you're any term investor, right? You want that yield. Okay, so that brings you to the DAT. The DAT has that wrapper like the ETF that you can buy, on your brokerage account very easily and very accessible. It gives you greater access to the yield of the underlying product. So in a sense, it's a better product because you can't touch spot because you're a traditional player. You're not allowed to. It's not part of your investment authorizations. It's a little bit better than the ETF. So that brings you to the DAT for here and now. At the same time, maybe someday a pure total return ETH product will emerge. And so maybe you have a little lack of transparency. I think the DATs are trying to say, wait a second, we're going to differentiate through transparency. This is what we're doing with the assets. And that's the game, is to give investors not just access to the asset, but to everything you can do with that asset, leveraging DeFi and everything else. That's the investment case. In a wrapper that they understand and in a wrapper that they're allowed to deploy. Oh, by the way, you open up the entirety of US equity capital markets. You can eventually, it's no different than any other equity. You take it to your prime brokerage account, you can get leverage, and you can use all the other things that you use equities for, collateral, et cetera, going forward. So that's the case for this instrument. You're right, Ram. There's like plenty of froth. I talked about the elements. They all have to come together. It's super hard. It sounds like Brian's got it figured out. But that's the case.
The one thing that I would just plus one on is I really do think that people haven't fully internalized just how powerful this accretion is and like compounding NAV over time. And so here's the math, and this is what helped me. And these multiples have come down, but this is the numbers that are fresh in my head. So say I want to start a DAT to buy Solana, and let's say all the comps are trading at 5 times. So I raise $100 from Steve. I give Steve 100 shares. He now owns 100 shares worth $1 each. That, but my DAT is holding $100. I now remix that USD into Solana. And because now I hold $100 worth of SOL, I achieve this peer-like multiple. And now it is a 500, and peers are all trading at a 5 times MNAV. Now my company has a $500 market cap, and Steve owns 100%, 100 shares worth $5 each. Here's where the accretion comes in. I now want to go raise another $100, but because I'm trading at $5 a share, I actually only need to issue 20 shares. So I go out to the market, I sell 20 shares at $5 each. I get another $100 US. I remix that into Solana. It takes on another $500 market cap, and now it's a $1,000 company. Steve has actually been diluted. So he owns 100 out of 120 shares, or roughly 85%. But now he owns 85% of a $1,000 company. And he just saw his investment move from $500 to $850 via one accretive issuance. So my one point is just this accretion math is so powerful, and you can trade at this premium that you could just use it to continually compound NAV. And as long as your multiple holds, your share price should move up commensurately. The second thing is I personally feel once we get past this wave of supply, that MSTR should be the floor in terms of MNAV. They're trading at like 1.6 right now. I say that because there should be some sort of embedded growth premium for a smaller company. Like if we issue $100 million of equity at 2 times, it's going to be very nicely accretive for us. Whereas if MSTR issues $100 million of equity at any multiple, it's not going to move the needle because they're so big. So there should be this embedded growth premium for us. Similarly, when you are underpinned by a much smaller token, all else equal, there's more potential upside. So SOL is literally 4% the market cap of Bitcoin. Bitcoin is unlikely to 5x from here, over any reasonable time period. It's the 5th largest asset in the world, whereas Solana has a lot more potential upside, all else equal. So there should be more embedded growth premium there, and then access to these additional value accrual mechanisms that you don't get with MSTR via things like staking and buying locked tokens at a discount. So for all those reasons, I kind of think when things shake out, at least I'm very hopeful that other DATs will end up trading at a premium to wherever MicroStrategy is based on market conditions. But that's at least how I think about multiples.
If you're able to take on meme-like properties in the process of driving these fundamentals, even bigger things could happen.
Oh, yes.
And let's be honest, this is a phenomenon we witnessed in crypto. We witnessed in equities as well. And that's the other thing to be mindful of.
Well, the whole goal is for these things to become a meme. Not all of them can. This is like a Highlander game. There can only be one. That's the nature of memes. You've got Palantir, Tesla was a meme, but you can't have them all meme. That's my view. Now I'll ask a question for you. I think I have an answer as well, but I want to get your perspective. So as an investor, would you prefer a high market cap to NAV or a low? Now, I think you're going to say, Brian, I want a high M cap to NAV because I can go accumulate the underlying spot. That's number one. Now, the irony of obviously is that you get more value with a lower M cap to NAV. So there's this reflexive property at work. And I think the game only works so long as the DAT has momentum. And when momentum breaks, you better get out of the way. And the funny thing is, if you trade below MCAP to NAV below 1, you're an acquisition target. If your MCAP to NAV is very high and you do an acquisition, I believe that asset price would drop. So I think this is more complicated. There is a very complicated kind of game theory that plays out.
I have so many thoughts. So high versus low MNAV, it all depends on where I think my MNAV is going in the future. If there's one DAT that trades at 2 times, one that trades at 5 times, if I think there's going to be convergence, I'd rather buy the cheaper one. If I think they'll stay where they are, I'd rather have the one trading at 5 times because their issuance is going to be more accretive. And then for me, it kind of all boils down to risk reward. Like if we trade at 1.6, 1.7, I look at like 1 times as the floor. And then you're like this, I don't want to say levered because it's not really leverage where all this comes from, but we're going to trade with some sort of beta to Solana. And so, the risk reward is that Solana moves up very considerably. In times like that, our MNAV will likely move up as well. So Sol Strategies was trading at 15 times MNAV back in December. It was a different market. There were many fewer options, but that can show you like where these MNAVs can go to. And then when you do trade at these higher MNAVs,